Hi guys, and welcome to the channel. My name is Kai, and in here we're going to be talking about all things personal finance, personal development, and adopting a mindset of growth to create a life of lasting impact. Today we're going to be talking about investing for beginners, because I know a lot of you might be wondering, how can I actually start? I read a lot about investing and where I can start, and I really want to get into investing, but it seems such an overwhelming, almost scary topic for somebody who may not be very familiar with it or has any background in finance. But don't worry, I'm here for you. I'm going to give you an overview of the world of investment, and in future videos we're going to go deeper into what it really includes and what you can do about it, what is the best option and approach for you, so the various ways. So really we're just going to look at the overall idea of investing and why you should be starting today. I myself started just over 5 years ago when I really got interested into investing, because I had a lot of friends who were doing very well and always told me about their successful investments. I wondered, well, how can I get into this? So I was very intrigued and I started reading more about it. One of the first books that really opened my mind to the understanding of what it really means to invest your money and make the money work for you was actually Rich Dad, Poor Dad. Really an insightful book that kind of talks about rather than trading your time for money, but let the money work for you. So the more you invest, it grows and accumulates over time. So it was a powerful book, and definitely recommend you to have a read. When it comes to investment, time is your best friend. The earlier you start, the better it is. The saying is, the best day of investing was yesterday, the second best day is today. So it's never too late, but the sooner you start and continuously grow over time, it builds up your portfolio. This is because of the powerful principle of compound interest. Actually, Albert Einstein called it the eighth world wonder. It's so powerful, in fact, that it can really create incredible momentum for your money. So the more you invest, even small amounts over time, it can grow into exponential growth few years down the road. Let me know in the comments down below if you want a separate video about compound interest, because I think it's such a powerful topic that I'm happy to tell you more about it in a separate video. But just understand the power of compounding your portfolio, your investments month after month. It's tremendous, and over time can yield an incredible portfolio. So that's really a powerful principle to understand. Also, of course, the younger you are, the more risk you can take, because imagine if one of your investments doesn't work out, well, worst case you lose a bit of money, but you still have a lot of time ahead of yourself to try something else or try again. Now imagine if you're 65 about to retire, you're not going to invest a big amount of your savings into cryptocurrency, which we'll come to later, that has high volatility, right? So you really want to use your youth to be more risk friendly and potentially have a higher upside and get more for your investments, rather than risking it all at the end of your life when you want to retire in peace and actually use your funds that you earned. With this, let's talk about the first point of investing, and that is pay yourself first. That's a fundamental principle of any serious investor, because often what I see, and probably I've done myself at the beginning, you kind of lived paycheck to paycheck, right? Whatever you earned, you were excited for your first money to come in, and you were just, so eager to spend it, going out with your friends to the bars, to the restaurants, spend it wherever you can, and that's great and all. But if you do that consistently, you're not actually setting money aside, and setting money aside comes like an afterthought, whereas a serious investor should make that their primary focus. So whatever money you get, be it from your salary, be it from a business undertaking, from wherever the money comes from, make sure the first place where you're going to put it is into a savings account, or invest it into a different vehicle, which we'll talk about later, into stocks, into real estate, whatever it may be. But make a conscious effort to set that money aside. Later, all the other fun things like your Netflix and Amazon and Google subscription can follow. But the priority should be to set money aside for you to invest. Of course, when you're starting your career, when you're young, you may not have that super high income, and that's totally fine. We all started somewhere, right? But again, it goes back to making a conscious effort. Even if it's $10 or euros, as I'm living in Europe, whatever the percentage, commit to it. And I really suggest to make it 10% in the beginning. If you can increase that percentage later on, fantastic. Of course, the higher your income becomes, the more you'll be able to put aside. But to start with, I think if you can really make an effort and to save 10% of your salary, of your income, of your earnings aside into a dedicated fund, that's a great place. Because again, as we spoke before, the power of compound interest, even 100 euros a month over 30 years at a 10% return will result in a tremendous total portfolio. So again, small amounts over time consistently will be your key to financial freedom. And at the same time, when you want to commit to saving, you really look at your expenses differently. I would like to consider myself a financial minimalist because I really try to avoid any unnecessary expenses that don't serve me value or really help me elevate my life quality as such. So really have a critical look at all your expenses. Do you really need 5 streaming service subscriptions? Do you really need to buy 5 Starbucks every day? If you do the math at the end of the month, that's a big amount that if you were to invest over time could really be your ticket out of the 9-to-5 grind. Be very conscious about your expenses, start tracking them. And again, we're probably going to have a separate video on expense tracking because I think that's a very powerful and fundamental principle of any serious investor or financial minimalist. And then really go through with a critical eye and have a look. Does that really make sense? Do I really need this? And with this, I'm sure, I have no doubt, you will definitely find some savings that you can make and contribute towards your investment portfolio. There's one thing in minimizing your expenses. There's always the other option of increasing your income, your salary, right? So this is obviously something we also want to closely monitor, that over time in your career, we want to build up our salary and income, or we find passive income streams, alternative income streams. Because what that pandemic we all went through has shown us is that only relying on one source of income can be very difficult in such times. So if one thing breaks away, you're being fired, you lose your job, whatever the reasons, you have other income streams of revenue coming into your account on a monthly basis to rely on. So I think that's, again, something very fundamental for any serious investor, not to just rely on one source of income. Secondly, have an emergency fund in place. Again, as I said, the global pandemic has affected a lot of people around the world and has been extremely challenging for a lot of people. So with this, as a serious investor, as I said, it's important to pay yourself first, put some money aside into your investment account, but also have a separate account that you really don't touch and just keep there for a rainy day or for any unforeseen reasons. And usually it's set to keep between 3 to 6 months. So it's really up to you. Know your monthly expenses, meaning how much money do you actually need on a month-to-month basis in order to survive and live the lifestyle you live. And then just take 3, if you can, up to 6 months of those expenses, put them into a savings account that's really safe but available for you anytime to give you that peace and comfort. So in case your investments go down, which they will, and we'll talk about this in the future, the market is volatile, but you always have that safe sort of stock of money sitting aside and gives you that peace of comfort not to panic in case the market goes down. Thirdly, and I know you want to talk about how can I actually invest, but this is even more important because the best investment is not necessarily in stocks nor in real estate. The very best investment you can do is into yourself, because the mind you have, the ideas, the knowledge you have, this is what actually guides any good investor. Being knowledgeable about the market, making the right decisions at the right time only comes by knowing how to anticipate market moves, etc., understanding the market terminology. So you don't have to just copy other people, but you can make your own decisions. You can read the market, you understand what is happening and what is the best way for you to invest your money. And this obviously is the purpose also of this channel, to make you a better and stronger investor. But in addition to that, there are a lot of great tools out there. There are seminars, there are online courses. Every month I invest into those. I buy them to consistently keep up with the knowledge, improve my understanding, and become a better, stronger investor. And I recommend you the same. Keep reading books, listen to podcasts. So really make use of this and make it a priority to continuously invest into yourself like any serious investor would do. Now, let's talk about the different investment classes. So there is so many things where you can put your hard-earned money into, right? We have, of course, most people think of investment as real estate, right? So in terms of real estate, that's a huge topic. We're gonna cover some parts of it, but personally I think as a beginner investor, it's probably a very difficult asset class to get into because you need a lot of financial resources, lots, big savings, potentially take a mortgage to even get close to owning a home. While I think it's a fantastic asset class, I think for us as a beginner, there are better ways to get invested. And that brings me to a second class, which would be stocks. And that's probably one of my favorite because stocks is really easiest way for you to enter the markets around the world. With the introduction of new trading apps that make things so much easier with the likes of Revolut, Robinhood, Free Trade, and we'll talk about more of these apps in future episodes, but they really help you to enter markets at literally zero expense. You can even buy fractions of a share, so you don't even have to pay $2,000-$3,000 for one stock of Amazon or Google. You can actually buy $10 of that stock. So that's a great way for you to enter those markets and get a feel for it, right? Because the most scary thing is to get started. So doing these stock trading apps really helps you get a foot on the ground and start to better understand how does it all work. And again, we'll speak more about the fundamentals of the stock market, how it works, etc. in future episodes. But right now, just understand that stocks is probably the easiest way for you to enter with the highest upside potential in terms of gain versus loss potential. Because imagine if an entire company, and I'm talking about big blue chip companies in the US, the likes of Amazon, Google, Netflix, Microsoft, all those companies, they're not going to disappear tomorrow. So you know that your money is going to be safe. If anything, they're only going to continue to grow, right? They have done for the last 10, 15, 20 years, and they will most likely continue to do so in the future. If all of them were to collapse tomorrow, I think we would have a much more severe problem than having invested in the wrong company. So as you can see, I'm really a big fan of stocks, and I think it's a great way to get started and to better understand how the financial markets work. And I think that's a great way to enter the market, and you're still liquid because you can fairly quickly, within a matter of minutes, sell your stocks and you have your money back in your own account. So again, in addition to having that saving funds, you still be able to liquidate your stocks at a very short notice. You won't be able to do this with real estate. To sell a house, an apartment, it takes months, sometimes years, right? You need notaries, you need so many things, procedures involved. So stocks is a very liquid, very easy to enter and easy to exit asset class. Number 3, you have the most exciting that you read mostly in the news recently of people's making millions or even billions, is the topic of cryptocurrencies, which has a very high seasonality. It's been in and out of fashion, yet people keep on coming back to it. As you can see, when it all started many years ago, really people didn't really talk much about it because it was seen like a highly speculative and questionable asset class. Yet we keep coming back to it, and over the years it's been only steadily increasing. Of course, cryptocurrencies has a huge volatility. What does mean volatility? That the stock price or the crypto price goes up and down in big swings, not just a couple of percentage or points as it does in stocks, but big swings. We're talking about 50% up and down in a matter of days, even hours, when we've seen flash crashes before. Nevertheless, in the long term, we really see a huge increase in the overall consolidation and contribution of people's investments towards cryptocurrency. Most recently, even big companies like Tesla converting $1.5 billion of their assets into cryptocurrency. That's a huge sign of trust that this is here to stay. And I'm myself a firm believer of cryptocurrencies. I do believe it's the future. I do think we have to have a strong stomach because there's going to be a roller coaster ride with swings in both directions. But in the long term, I really do believe that it is going to be replacing fiat money, which is the money we're using today, the euros, the dollars, the yens of this world, because they are controlled by governments and they can basically continue printing money, and that has a huge impact on inflation, which basically means your actual purchasing power of money is losing value by the day. So cryptocurrency, you all know about Bitcoin. It has only 21 million Bitcoins ever in circulation. So far, they just mined over 18 million. So there will never be more than 21 million. So nobody can produce more Bitcoins. So that's like gold. And that's why it makes it so valuable. As a store of value, I think Bitcoin is so powerful. And that's why I'm a firm believer. So these are the three main asset classes. Of course, there are many more, such as gold, such as bonds, and so on. But I think for the modern young millennial investor, I think those are probably the most relevant, easiest to get in and out, and the most liquid. So when you talk about investors, you often hear about day traders, right? But there's a differentiations. We are not here to learn how to day trade because I'm not an expert in it and I don't really believe in it because, again, I have another job that I do outside of YouTube and outside of investing. So I don't have the time to be sitting in front of my computer 9 hours a day and looking at the markets. I want to set it and forget it. So I would consider myself a long-term investor, and I would strongly recommend you to do the same, because if you're moving in and out, you will usually perform worse than if you stay in the market. There's the old saying, it's not about timing the market, but time in the market. That's where the power lies. So that's a broad overview about what the world of investing has to offer. In future videos, we'll dive more into each of these asset classes. But overall, it's a great way to get started, to grow your financial portfolio. You don't need a lot of money to get started. I think with small amounts, you can really get your feet wet, so to say, and start investing. The most important is just to get started. So many people are scared, they fear of losing, they don't know what it is, and that uncertainty is holding them back. So I hope to kind of break that uncertainty and make you feel comfortable with it and really start slowly but surely over time building up your portfolio, and you will see gains from it. So if you like that video, I would really appreciate if you hit that subscribe button, drop a like, and if you want to see my little doggy Nutella in future episodes, leave a comment below and she will be there. Thanks a lot, and I'll see you in the next one. Ciao.